Hi everyone, today let's take a quick look at the job revision, then we'll take a look at all the data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So US job growth was revised down in a major way today, and it was a big number here. So we can see payrolls was revised down from 800, and you can see here it was revised 818,000, meaning that 824,000 jobs were overstated. That is a huge number in 2009, and now we're seeing 818,000 now. So we're comparing the two, and this is a big number. So markets definitely did not like it. Of course, there are some differences from now in 2009. There's currently no recession. The jobless claims have remained relatively low. Unemployment rate still remains relatively low. But again, this is a big number, weakening jobs market, and we've been talking about it on this channel for a long time. And this is yet another indicator that the economy is slowing substantially, and we are likely to get that rate cut in September. But will that be enough to potentially revitalize this economy? I'm not sure that it will be. And does that mean we're headed into a deeper recession versus that soft landing that markets are hoping for? Looking at fear and greed, we're at a 51 versus a 44. You can see we continue to trend up. We're still in that zone where if this is going to be a bear trend, this is where it's going to turn pretty soon, right between that 50 and 58 area, same as the last two iterations. If we push through here, we're probably headed back to extreme greed, which would mean we're likely to take out these previous highs. Right now, extreme greed on momentum. Strength continues to hover in fear, but breadth improving slightly. Greed there. Put call ratios all the way back down to a 0.7, still seeing greed there. VIX continues to tick slightly higher, which is interesting considering markets are hovering. And then safe haven demand all the way back to neutral. Junk bond demand continues to hover. So markets are still mixed, but relatively bullish. Moving over to the economic calendar, basically nothing besides that FOMC minutes. I did take a look at it, and the minutes did indicate that we are likely to see a cut in September. So again, continuing to push that percentage up. I still think it's coming. If we don't get it, it's going to be terrible. So markets definitely pricing it in. I do think the Fed is going to follow through on that. And then looking at tomorrow, we do have initial jobless claims, some economic data, which I continue to expect to see that weaken. And then existing home sales, want to see that number come in good, but I think it's unlikely at this point. Jackson Hole Symposium does start tomorrow. And then for the Friday session, you can see we got Fed Powell speaking. I'm sure he's going to continue to be relatively dovish right up until that September meeting, and that'll wrap it up for the week. Moving over to max pain, looks like we got the max pain numbers back here. So 552 is max pain for this week. Current stock price all the way up at 561. Put call ratio still very high there at 0.2. Puts at 550, puts at 555. So continuing to support that price. Top of the puts is 561, again, right where we're sitting already. And then you can see that option here right in the middle here. Makes sense that we would get a 552 finish, but markets have remained quite bullish, although we are getting some sideways choppy action. Moving over to the charts, starting off with the S&Ps here, I think I'm going to continue to do these bigger structural videos during the week a little bit more to highlight these major trend resistances. You can see we are right here, marks the top here in March. Consolidation, got this rejection here, and we are retesting again. Might see a push to that next level at 56.54, which would be about another 0.5% higher. Momentum slowing, RSI much lower than this previous high, so definitely divergence, definitely an area of resistance. Markets have held up quite well, 0.42 on the day, but this is a key resistance here. And then looking at the normal charts here on the hourly, you can see we did break out above this previous level, held that, and we're gaining after hours. Looks okay into the after hours tomorrow, and that key level is 565.16, which is that all-time high. We're within striking distance of there. It would honestly surprise me if we did not at least fill the gap back to the 16th. And then that next level, like I mentioned right there, just seems like we're going to touch it, and then we'll see what happens after that. If this is a double top, that's going to be a major move for markets to the downside. If we push through it, price discovery, got some shorter term trends sitting up around 574. Moving over to the Tasty charts here on the daily, you can see we're still above that ATR trailing stop. So now we have bullish conditions. We've had it for 3 days in a row now. Upper ATR band is at 570.11 at this point. So Tasty charts still showing quite a bit more bullishness than the rest of them. And then looking at that 4-hour chart, chart, pull back in time as we expected. Upper ATR right now is at 562.81, which gives you about a 0.5% potential for tomorrow. Volume was a little bit better here today, but nothing crazy. And you can see those ATR trailing stops on the 4-hour have been flat for 2 days. So we're in a little bit of consolidation, but it seems like we're getting a bit of an upswing there. And then moving over to the NASDAQ chart, similarly, but not quite the same. So you can see this low here marks the top here before the rejection. And now we are testing that level again here. Again, still looks okay. RSI and momentum still bullish, but RSI is much lower than this previous high. Need to break this and push if we're going to get back to these previous highs. Again, I don't think that's super likely on the NASDAQ. And then looking at the short-term charts here, you can see we broke this level. We're pushing after hours. Everything looks bullish. Momentum bullish, RSI bullish. Still continues to look strong on the hourly chart. Broke out above this previous high from yesterday. Did throw a wick, did reject, did hold the low. Continues to look strong. Next level there is 486.84, and it was still about a 0.5% on the day, and it definitely looks like we're going to get to that next level here. So overall, still looks bullish in the short term, but those medium to longer term trends are holding as resistance in the short term. Moving over to the Tasty charts here, you can see the Qs sitting at that ATR trailing stop. Still cannot quite get above it, 484.32. Still technically bearish conditions, but look at that volume swing that we saw here today. Big volume heading towards that resistance, and then that upper ATR band, if we were to break this zone, is sitting all the way up at 494.20. Certainly possible we get there, and that would also give you a very close proximity to that gap fill back from the 16th. Qs still need to fill that gap, although the SPY has already done it. And then looking at the 4-hour chart, upper ATR band is now sitting at 486.09, so that would give you about a 1% potential for tomorrow's session. Moving over to the Russell and the Dow, we've been watching this trend line here for a while. Seems like we're breaking through there now. We're above it after hours. We're gaining after hours, momentum bullish. Next level would be 218.79, and then let's go ahead and extend out this trend line here. That would give you a price target of around 219.76. Continues to look bullish. Everything's good here. And then the Dow, finding resistance at this trend, again up a little bit after hours, but still cannot get above it. Needs to push, hold the level, and push to this next one if it's going to do it. Otherwise, if we reject from here, obviously there's quite a bit of downside. Overall, everything still looks a lot better today than it did yesterday. Moving over to the Mag 7 here, another positive day, 0.58, momentum bullish, RSI bullish. Still seeing that divergence, but it continues to march along. 273.41 is the next price target, basically flat after hours. Got the next trend up there just behind it at 274.73. So we're still gaining right to that next level, and then we'll see if this is a lower high or if we're going to break this level and start to push potentially back to these previous highs. Again, I don't think that's likely, but right now we are still in a bullish short-term trend. Moving over to Apple and Microsoft here, you can see Apple is on this uptrend still, and in the short term it is still doing that, but you can see here we've gotten 3 days in a row of sideways choppy action. Momentum stepping to bearish here for the first time. It was actually slightly negative on the day as well. RSI flat, volume flat, nothing crazy. We can't seem to get to that 230 level. So again, seems to be fading. Looks like this is going to roll here. And if a market leader like Apple continues to flatten out and roll, that's going to be bearish for markets. You can see inside candle here on Microsoft, not great there either. Momentum and RSI are still hanging out there, still bullish. 429.88 is the level. We'll see how that plays. If it breaks, you got the 55 there, but inside candle is not a great indicator, especially on a day where most of markets were bullish. Moving over to Tesla and NVDA here, you can see Tesla inside candle 0.98, still bullish here, but not super great. Wanted to see this push to 232.50, couldn't quite do it. Managed to stay bullish, but not by much. Still above all the EMAs and SMAs, so you could argue that's a little bit bullish as well. We did have a low, higher low. But at this point, this seems like we're kind of topping out just like everything else. NVIDIA, same thesis here. High, lower high. If you get this lower high again, we're probably headed much, much lower. And again, look at that momentum indicator. We got the first step to bearish, so that's not great at all. Down a little bit after hours, nothing crazy. The price target would be 140, but at this point, you're probably looking at a test of that 124.68 level before we see any kind of pushes to that next upper level. Moving over to Meta and Alphabet here, you can see Meta just cannot seem to get above this kind of very shallow trend line. Marked an initial top, a second one here, and now we're at it again. Momentum continues to fade there. RSI did perk up a little bit, but we touched that line, pulled back slightly, so just can't seem to get above it. We're probably topped out at this point. just with the way the rest of markets look. And then looking at Google, it's looked very strong in this short term. You got a low, higher low setup, but at this point, this looks like a bear flag setup. So you got a big move down. We're getting this choppy action, really tight range. Can't seem to break higher or break any major levels. Consolidation. And if this rolls here and starts to take out these lower lows here, then this is going to have a substantial down move. So this is actually looking a lot tighter and a lot more like a bear flag setup. Moving over to staples and discretionaries, let's look at staples here, finally taking out that all-time high. We got the re-acceleration here after this super long consolidation. We've been watching this for a very, very long time, all the way since the 66 area, and now we are finally here at all-time highs. Price discovery, the high of day was 82.29, and that eclipsed the previous high of 81.34. So all-time highs here on staples. Seems like this is the place to be, at least in the short term. And then looking at discretionaries, these actually got a pretty decent pop on the day. Target reported some decent earnings. Momentum, RSI still bullish here. 189.38 is the next level now that we have pretty well cleared that 185.36 level. After hours down a smidgen, still looking to push to that next level. Momentum and RSI, like I mentioned, very strong. Moving over to semiconductors, this looks remarkably like a head and shoulders pattern at this point. Left shoulder, head, right shoulder forming. And if this neckline here at 200.6 breaks, that's obviously going to be massive to the downside. Right now, we are right at that 55 EMA, which is at 252.13. Momentum has been basically flat for 3 days in a row, right at that major resistance, which makes sense. Again, losing that momentum, one more day should bring us into a step down on momentum if this breaks here. Not much of a trend. It's been a straight up move. So if this line here breaks, you would expect at least to pull back to that 21 EMA down around the 234 area. Moving over to wood and gold here. Global timber and forestry continues to be on a run, 0.76 to the upside. The interesting thing here is we are now at this resistance. So we've been in this kind of bull flag setup. You can see the rally in, consolidation. It's a really wide flag, so arguably not a flag, but something to watch. We've been above it a couple times, but then we reject right back to that lower area. And we are at it again, just barely above the trend. Momentum bullish, RSI bullish. If this breaks here, this probably has a lot of room potentially to that 85 area. And then looking at gold, still on this breakout, but it did have a little bit of a pullback, momentum fading slightly. But once we get that rate cut, it should be in good shape. And it is up a smidgen after hours. I still like this to continue to swing to the upside. Realistically, this is probably headed to the 250 range before we see major pullbacks. This is a clean break. It's just taking a little bit of time here before we get that bigger swing up, in my opinion. Moving over to RIOT and Marathon, these are doing kind of what we thought they were going to. We're still expecting that short-term bullish push up into this 9 range here for RIOT, and it did get a step into bullish momentum here on both of them. Actually, RSI still look okay, 3.86 and 7.27. So Marathon hit the 21 already, so that was a big move right to that level. So that would have been the first price target. Now if that breaks, 1878 is the next one here, which again would be a pretty substantial move. That would be about another 6.5% higher. Both of them look pretty good. Based off of these moves, you would think Marathon's probably in better shape, but it is at that point of resistance potentially. Moving over to Breadth, 20-day Breadth, still hovering at that same exact level. Remember, we talked about it can take a couple of weeks before you see major breakdowns, but this is the zone. We are still here, momentum still bullish, but the bigger story here is the 50-day Breadth. So we got an up candle, got above this trend line. We've been above it a few times, but we haven't closed above it for a long time. This trend goes all the way back here to the highs in December. Closed above it. We'll see if we push that 77.46 level. Arguably, this structure is broken. Momentum bullish, RSI bullish. Could be a bit of a fake out, but I do like it. Overall, this should give you at least another day or two of bullishness, or at least another upswing potentially. Moving over to the dollar, this continues to absolutely crater straight down. Did see a slight bounce here early in the session and then gave it all back immediately. Got a little bit of a dip low there at the end of the session, but we did break 101.25, so that is very bearish. You would expect a retest of that and then a continuation lower. You can see we're retesting the SMA there, so that looks bearish. That's 4 days in a row of bearishness. Let's go ahead and extend out that trend line here. touch that trend line, momentum still bearish, super oversold. It does make sense as we got that FOMC minutes, which did indicate a cut in September, so the dollar is continuing to crater there. Eventually this will end and then we'll see what happens after that, but at this point it continues to go lower and arguably it's accelerating despite those super oversold conditions. I do want to look at it here on the weekly chart just for a moment. Gives you a price target of that 200 SMA down at 100.3, momentum bearish, RSI bearish. You can see that RSI is in oversold conditions on the weekly chart. Again, pretty uncommon to see the dollar do that. Last time we were even close is back here in 24 August of 2020, and even at that level we did end up going lower before we saw that bigger rally, and sure enough we are oversold here, and it does look like we're going to touch that 200 in my opinion. Moving over to bonds, J&K finally touched that price target at 96.51. High of day was 96.52, so almost to the penny, just overthrew it and then rejected back below it. So still in this bull trend. There's still risk on in markets, which is interesting. And then TLT did throw another wick down a little bit after hours. Still think we're headed to 100, but it seems to be slowing down just slightly. Could just be a pullback in time. Momentum bullish, RSI still bullish. Moving over to the volatility indices, you can see MOVE Index did basically nothing here today, down just slightly. But look at the VIX. Forgot to talk about this yesterday actually, but it was up slightly yesterday. Got that first step to bullish, got a little bit of an acceleration here, another step to bullish. So the VIX showing some signs of life, potentially swinging back up to the 20 area. Something to consider there. We're seeing the VIX and markets move in the same direction, which usually doesn't last for long. One of the two is going to break down. It doesn't seem like it's the VIX at this point, so could be in that culmination phase for markets, despite the fact that they do look a little bit bullish going into tomorrow's session. Moving over to my accounts, you can see I was basically flat on the day. Says I was down a little bit, but I was able to make some of that up. And that was actually a pretty good save considering I was a little bit short going into the session, and then markets were super choppy and then a little bit bullish at the end of the session, and I was able to adjust to that okay. In terms of positions, 212 now for 5 days out, rolled up a little bit here on the Russell, so that puts me at 216, giving myself a little bit of room there. I can roll out if I need to. Trying not to roll out too much on the IWM because it can be quite volatile, but it does look bullish going into tomorrow's session. So being patient there. And then looking at the Qs, same thing here, rolled out quite a lot, 472 for $15 credit. Trying to give myself some room. And if we do start to see that market roll over, I can take off the shares and then ride these calls to the downside, depending on how it looks. And then for tomorrow's session, I sold some 481s for $1.30, which ended up being a pretty decent rally into the end of the session, about 50 cents higher after hours. So looking to make a little bit of money there while still giving myself some room on this longer dated option. Let me know down in the comment section what you think of the jobs data, and let me know what you think of the new format. I'm probably going to keep it. I think it's better. You guys respond better to the weekend videos, so I'm going to try to keep more of that in the daily videos, but still let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.